Okay, so welcome everyone. Welcome to tonight's session. In tonight's session, I will be covering over supply and demand. What else did I talk about? One second. Sorry, guys. I know I'm all over the place. Oh, right here. Supply and demand. Holding on to your winning trades as well. Now, I know majority of retail traders sold little pops, right? So they probably took a trade from here to here, and then they see later in the day that they missed out on this big trend, right? That was seemingly easy. I also want to talk about how retail traders got shaken out prior to the very simplistic trend, right? As well as holding on to trades using the 9 and the 20, and also basing risk off of the 9 and the 20, and finding entries, right? I feel like a lot of traders are struggling with finding entries. Boomshot, yeah. You send me a DM, Boomshot. You can send it on Twitch, and I'll try to get back to you this evening. So, starting off, before we begin, also, I will be doing another giveaway tonight. I'll be giving away 2 spots to the House of Stacks for the month of June. Okay? Just for, we'll do that at the end of the stream, just like we always do, right? And just like anything else, right, this is exactly the live sessions that we hold 3 to 4 times each week. I do them every Sunday, right, before we begin the trading week to prepare you, as well as, a few more times throughout the week, just so that we are on top of ourselves technically and, emotionally, right, controlling that kind of mindset as much as we can. But lots of TA and proper strategies that I deem as necessary trading options the way that I do, I guess. So moving forward with supply and demand, I want to review the directional analysis that I had this morning. Now, typically when I do the directional analysis, right, I'm looking for the bulls to hold the pre-market low or the bears to defend the pre-market high, right? And what I have here, let me see if I can blow this up. There we go. That's a little better. I said longs, they're aiming to defend the pre-market low at 306. This was posted at 854. But as we can see, right, price actually, right after I post this, begins to flush below the pre-market low. We know how supply and demand works. Well, this was the cluster I wanted to hold, right, this pre-market low. And if this was going to fail, we should see the interaction with the previous day low demand, right? So with the previous day low demand, that was the target that ended up being held, but we did have targets if they were able to break through the pre-market high here of 308.5. They would target the previous day high up here at 312, the 315 zone right here, and possibly 320. I think we could see 320 tomorrow, but it all depends upon the overnight session and what it's going to be like trading Friday, right? The first Friday of the month. So, but as you can see here today, let me put that back, right? You can see here today, I had a pre-market low zone. The pre-market obviously changed, right? I had this, I think, like as a zone, something like that. It obviously failed it. And since it failed it, it went straight down to the previous day low. I actually nailed the bottom here on the 306 calls, and I'll explain how I nailed that entry and how I was able to ride it, not for the entirety of the day, but for the the better half of the day. And but we can see here it reclaimed this pre-market low or pre-market high, then it just pushed up to the previous day high, and then ultimately hit this 315 zone, which I snagged all the way over here on the hourly, all the way over here, right? I want you guys to look at these zones. Okay, well, it will allow me. Okay, well, it's not wanting me to. Okay, that's annoying. 1 second, guys. Right, you can look right here at this zone. and look to see why it was created. Right, it was a large upper wick here prior to a move down. It also was respected once, twice, and 3 times. Right, this was a key level, as well as look at the price, $315. Right, you guys should know that your whole dollar psychs typically are every $5. Right, so like if it was at 300, that would be 305, 310, 315, so on and so forth. Okay. So you have confluence, 1, that there was a supply zone here, and 2, the whole dollar psych, right? And you can see here, right in the after hour, we hit 315.61. And if we look at the interaction with each of these zones, right, from zone, pushes down, clear lower wicks, pushes up, look at what happens here. Imagine that this is a line chart, right? It breaks through. Look at what I posted here. This is at 8:30 in the morning, every morning. One of two things will occur with the pre-market high. It will, 1, either break base and continue forward, and the base is where your entry is, or 2, reject. Well, what happened here? This did, right? The break in base. It broke this green line, the pre-market high, came back and based on it. You can see that nothing closed below it, and then shot up another, what is that? 6 points, right? Yeah, another 6 points right there, all the way into the close, right? And this is, this is why I do the same thing every single day. I've refined my strategy to the point where it is, second nature to me, right? I know this, my own strategy, like the back of my hand, and I will rely on it. Something that is key to a lot of traders, and maybe this may help you understand where you are on your I know, on your own method of trading, but ask yourself this, right? Look at your strategy as a whole, right, in its entirety, and say, would you buy that strategy, right? Would you consistently put money behind that? No doubt, even if you lost, you manage your risk, right? Would you buy that strategy? And many of you would say no as of right now. So if you would not invest in your own strategy, why are you applying whatever kind of style of trading you're trading to this type of price action, or missing out on trends, or fighting the trend, looking for reversals, everything like that, right? With this pre-market channel, I showed you with the directional analysis, it's all the same levels here, right? 308.50, 308.50, 312.64, 312.64, right? And then 315, 316, 315, 316, right? And I gave weight to the bear sentiment. If it was going to fail, it would have hit 302 or 299 or 300. Right? I'm never biased towards one perspective over the other, because that forces me to miss out on half as much opportunity, right? If I don't even know what the other side is thinking or what they're looking to do, then I am at a disadvantage, okay? Do you use all hours, only 4 a.m. to 9:30 for zones? I use all hours. All hours, yep. Okay, and I want to show you how I drew these zones. Okay, so typically in the morning, you guys will see me draw them on the 10-minute, so we'll just start this from scratch here. All right, now I do the pre-market high, okay, and I had a pre-market low down here, but ultimately this is truly the pre-market low, previous day low, previous day high, right? So we start off very simply with support and resistance levels. I mean, everyone knows how to do that, right? I don't use the after hour levels. Sometimes I do, but I really focus on the pre-market levels. All right, so look at this. I have 2 parameters for a zone, right? Creating either a supply or demand zone. They're both the same. Large upper wicks. And when I mean large upper wicks, I want to see candles not being able to close above or push into that upper wick, okay? So practice on your own, right? Go on your own 10-minute chart, marking out the levels that I just marked, right? And you can mark a little box on the lower wick, or the upper wick, excuse me, lower wick. All right, look at all this. This is key. I mean, you have to train your eye to see this. Okay, this level, right? Just look at this day. This level, nothing closes above. When it pushes up once more and retests it, same thing, nothing closes above. What do you think that that's telling you? Right? What is that telling you? As a day trader, and you're reading this, and you can see very clearly here, you know, this is a 10-minute chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 100 minutes you had to take a position on puts, risking this high of day area. Sellers are in control. Sellers are defending that area, and until you see a candle close above like this with strength, nothing's going to change, right? I just use the 10. There's no real reason, guys. So remember, you could use the 15. It doesn't matter. The 10, I just enjoy. Yeah. So sellers are there. So if you know what that sellers are there, marked from a little support or resistance level, isn't that what a supply zone is, right? A supply or demand zone is telling you where buyers and sellers are located, so mark it. Now, if you're trading futures, you would have been able to capitalize upon this, right? Because you can see in the pre-market session, it rejects off of it, shoves down, all right? Let me extend out all of our zones that I had, and let's see how they were reacted with. Large upper wicks, that's all we did, large upper wicks or lower wicks, okay? Well, look, why do you think I hit the 306 calls right off of the open? If you can go back on the stream and you'll hear me say this. Oh, price action is pushing down right off of the open, right here, 931, 932. I take them right on the lower wick right here, and I said, hey, it's pushing down with strength. I won't take an entry on calls until it peaks below the previous day low. I want to try a fake out breakout trade. I've been talking with Ronnie TradeStall about this in the group, and it was the best entry for the day on calls. Right? I mean, it was undeniably the best entry because it was the bottom for that intraday. 306 call QQQ scalp 9:32 a.m. right? 9:32 a.m. So I'll show you the trade. All right, 9:32 a.m. Let me go on the 1 minute, excuse me. This is the 306 calls, the 1 DTE, the Friday expiry. Okay, actually, I want to show you something real quick also, right? If you guys are not using your options contract, you are not trading options correctly. Thanks, Churro. Appreciate it. So, right, off of the morning, I always do this. I'll pull up 2 options contracts, calls or puts, and I'll mark the low of the open candle. So I mark a low, right? Now, what is that? What should you do here? You see that lower wick, and it's a hammer candle. What does that tell you? Demand, right? Gunners on it. Buyers are there. Draw a little box. Extend it out. Now, what you have here, what you've created, is something to base risk off of, based off of other buyers, right? Larger buyers. We are ants in this market. We have no, driving force in the market. We're, little ants walking amongst elephants, okay? So trade amongst them, wait for them to reveal themselves, and try to get in with them. I got in here, right on the low of day break, right? What is this? I need the 1 minute. Right on the 1 minute. 9:32 a.m. Was it 32 or 33? Right here. Look at that. 9:32 a.m. 306 call, QQQ scalp. Look at this, 930, 931, 932. All right, so if you look at the spread of this candle, if I can get my arrow back. All right, it ranges from 219, okay, so 220 to 249. I had an entry of about 230s. I think it was 237 on this. So right here, okay? Now, I have my risk level. Typically, in a demand zone, or if you're just taking it, you want to risk about 10%. Well, 10% is literally right there, right at the low. You can see it says 9.65%. Yep, what's up, uptrend? I'm doing very good, very good. So right there at the low, I took the entry on this, and this pivot was going to be my stop loss. Well, if you look on the underlying, QQQ, that was the lowest point of the day, right? But you would have been like, hey, why were you looking at calls there, right? It broke low of day and was under VWAP, and 9 and 20 EMA was shoving it down. Okay, now we already had a pretty steep sell-off, I guess, from the Microsoft news or whatever this morning. And everyone, I said, guys, be careful. Do not be that trader that's looking to just smash puts right off of the open. All right? Look at this. I had my previous day low. I had a demand zone. What is the rule about entries in a demand zone? Does anyone have an idea? Right? What's the rule about it? What do we not take in a demand zone? Puts. You never take puts in a demand zone. I don't care if it works out. It might work out for you, right? It might. But the consistent outcome of this trade is that it will not. I am only looking at calls until this point. For me to take puts, what do I need? Right? For me to take puts, what do I need? Break through the demand zone and a base, right? I'll finish your statement there, right? And a base. A break and a base. The base gives you a pivot to base risk off of, and then it shows down, right? And then that's your risk. That's not what happened, though. We got a tweezer bottom forming, right, on the 1, and it ends up showing on a larger time frame, obviously. But many times, I always say this, if you're a breakout trader or aspiring to be one, stop, right? Stop what you're doing right now. You're going to lose so much money for no reason. I don't care if you learn from the best breakout trader, this or that. You will fare much better trying to find dip ads or, puts on pops, calls on drops kind of ideology, okay? I know, I say it all the time, man, who just got wrecked right there? And you guys will say breakout traders, right? A breakout trader is like on the 1 minute, they're like, oh, this is so intense. Look at these big red candles. I'm going to hit it if it breaks that low. That's my confirmation. I know that, how many times have you guys gotten faked out, breaked out, or FOMO bought into a breakout, and then it immediately ripped in the opposite direction? I said that I would take calls here, and I'd risk, 10, 15%, whatever, right? If it just kept flushing, then I'd just get out. But that's not what happened. I nailed the bottom and was able to take this for over, $300 a contract gain. All right. Over 30, 540. I think at the end of the day, they were like $8. I was like, very pleased with what I made off of that initial entry. So there was no reason to be greedy or stick around all of the day, or, all the time. GT, it is simple, right? Would you guys not agree that everything I'm teaching is simple and you can, execute this in a simple manner? But trading the open is not simple, right? If you look at the 10-minute, this is a prime example of, hey, new traders, you're not supposed to be trading the first hour, the first 30 minutes or an hour. How many of you burned your, let's say, majority of your buying power and then just watched a trend just go up all day, right? How many traders did that happen to? I'd say majority of retail traders. Okay? Oh, is it going up? It's going down. It's going up. It's going down, right? You can't even get a grasp on your own emotions or what kind of trade you want to take because you're all over the place. And I would say majority of the time, traders are trading here within the bodies. I know as a day trader, the money's made in the wicks, right? Would you not agree? If you look back and you'd be like, man, if I bought any lower wick today, I would have made money. Think about that. If you bought any lower wick today, you would have made money. All right, so what I mean by that, let's just pull up here. Okay, let's say you buy this lower wick. I mean, you wouldn't have stopped out. It didn't even break your 10-minute 9. You would have made money. Well, let's say you bought even this lower wick. You would have made money, wouldn't you? This lower wick or this lower wick. Right? But why do traders buy? They buy when they see this big green candle. When they see this, like, buy it, buy it, buy it. Focus on the wicks. Money, the most money are made in the wicks. That's why I draw those zones on the upper or lower wicks, okay? So I also want to talk about another example of a zone, and I draw it as, or explain it as like small tight body consolidation, okay? We've had a lot of trend days recently, so I haven't been seeing, the consolidation as much, but maybe I can find an example here, right? I'm just kind of skimming through here. Okay, so like this isn't bad. Right? Small tight body consolidation prior to a large move in either direction. Draw a zone, right? Extend it out. Now, this obviously peaks through much lower, but as they build on, the buyers come in rather aggressively after, the first hour and a half, 2 hours, and they maintain this zone, right? Let me see. We've just had a lot of very volatile trend days. Right here, this is a good one. Okay. Small tight body consolidation. You can either draw the upper wick as well, but you can draw this whole little zone here. Extend that out. You can see the following day rejects in pre-market, is brought all the way back up from below VWAP, rejects off of it again, and once more. Yeah, JD Claire, dude, I'm training a bunch of psychopaths here. All right. But how can you play QQQ within kind of 400 and not buy too far out of the money? So Alika, today, I think the contracts were all under $3. Okay, so you don't have to trade QQQ. You can trade IWM, right? And even like on Monday, right? The Monday expiry. Look how cheap these were. $1.60, $1.20, right? Let's check out the volume on them. Volume, it's okay if you trade. I mean, you're trading a $400 account. You're trading one contract. It's really not that big of a deal. But I would recommend trading, IWM. And if you're gonna trade QQQ, now I trade the first 1 to 3 out of the money strikes, but there's nothing wrong with trading these a little further out. But you just want to watch your delta, right? So like your delta, where you at? Your delta, for a smaller account, a smaller delta is probably better, but you don't want it to be so far out of the money where it's not going to follow the underlying, right? Like these with the, delta of like, 10 or 15 or less, these get really, they end up getting burned out or fried, right? As Mr. Scalper would say. So, you could trade 4 or 5 out of the money, but, you're trading such a small account. You need to realize that these smaller contracts, although oftentimes we do see large gains, just like, like we were saying on the 306s, they were super cheap, like $2.30 and end up being like $8 at the end of the day. You need to be able to take your profit regularly, right? Because like, let's look at something like this. Send that to 3. Right? These are like, they just move a little differently, right? I mean, look at the volume. You have like no volume on this, right? like 5, 3, 13. You know, there's not a ton of interest in these that are super far out of the money. So, you know, if you're going to trade them, they do move, but just be very careful, okay? How do you pick your zones? So, one thing you guys really need to be able to do is to back test drawing your zones. So, like, we can go through and just draw some out, right? I said this last night too, right, in the live session. I said, it kind of looks like a range here. Did I not? I mean, do you guys remember that? I said, okay, and then you have a demand and a supply right there. That's the high of the range and the low of the range. And when it pushed down, it popped up and it held it through the overnight session and in the pre-market session. Well, they hold this low here, 304, 305 area. I mean, what kind of trades do we take here, guys? Right? Zone to zone. You could have taken it from 305s or whatever all the way up to 315s in the after hour, or 312s in the intraday. But I mean, it's super simple. I mean, this is just drawing upper and lower wicks, right? So let's draw some more. Okay, so you can see fairly early on here, okay, you had a resistance level. Well, there's a large upper wick, and you can see nothing closing above it. That tells you on the 1 hour that there's a large amount of sellers at this area. Okay, so it's up to you to determine, right? I mean, this isn't a large lower wick, nor do I see small tight body consolidation. But you can see this supply zone was respected the following day, and the next, and the next, and the next, until we see what, right? Buyers slowly accumulating. You can see right here that buyer ate it up here. They bumped up their bid once more. See this lower wick? And draw a zone off of it, right? A higher low, right? And they step it up more, right? You can see this. Look where the buyer steps it up once again, right? So, let me see here. Moving forward, if you want to improve trading supply and demand zones, I really would try to practice on 1 or 2 tickers every single night. I recommend like SPY or QQQ. I mean, if you're trading options, you should always at least know what your indexes are doing, just to give you kind of guidance or confirmation on any of the holdings that you may be trading. Okay, so just like this. I mean, look at this. Obviously, it's in hindsight, right? And I was talking with I forgot who it was today, but it was Mr. Harris. And I said, trading to me is rather simple, right? It really comes down to, what did I say? What did I say, dude? I said, okay, right here. I said, it's all just probability and recognition of your edge in real time. Well, traders always like, man, it's so hard to figure out, what is my edge, or what is actually, following through real time. And you're only going to learn that, throughout trading, how to apply these in real time is through back testing and in review, right? Yes, emotions are a huge part of it, but if you can't, get a proper read off of the price action being presented to you, emotions are not going to give you any sense of, validation or confirmation for a trade, right? You have to use your emotions or gauge them and see whether or not the technical trade that you've developed is being supported by that, right? You can see, right, large upper wick on the 1 hour. It's respected. Well, let's see how long these sellers sit in this trade. Right, respected that day, this day, in the overnight session. Once again, they push it down, pops up. This right here is key. That is called a fake out breakout. That is exactly how I got into the 306 calls at the very bottom on QQQ today, right? You really want to be able to see a weak break. So, some traders would have said, hey, that's a strong break. Well, into the after hour, right, it didn't sustain that move, nor did it sustain the EMAs. This was a pretty weak break, right? Break up, upper wick, upper wick, upper wick, then following red candles, right? And this is where the buyers end up stopping out. Remember, I said these lower wicks will showcase to you where they most recently have stepped in. Well, this pushed up, pulled back, and it pushed up once again. Well, where it pushed up, the origin is where the most recent buyer stepped in, right? And what happens? It breaks down, large upper wick, and it was a green candle, shows that it pops up bases where buyers most recently got in, right? Now, why do I like breaking bases? Because what it shows to me or signifies is that, hey, this buyer, if they're given any chance to stop out close to break even, they will take it, right? No one likes losing money in the market. Shorts also will look at the base in this kind of downwards move as an opportunity to take away those breakout or break-even stop losses from the longs, right? So they'll hit it. You hit with twice as much selling pressure here, and look what happens next, right? Break, base, continuation. Okay? But yeah, if you really want to improve on this, I would chart out like QQQ, SPY. Maybe you throw in like something else you trade every day. Some of you trade like Apple or AMD. Those are fantastic tickers to practice supply and demand on. And Apple is a pretty key component in the market, right? So, covered over pretty much the basics of how I use supply and demand or what I look at. I mean, even on this day, right? I think I drew this one. Large upper wick. No, this one's different. Large upper wick. Respected, respected, respected. Again and again. Right? Yep. So, I want to touch on the Qs today. All right. And how you could have held on to your winners. Someone asked a question. What is the ticker name for a call or put options for QQQ? Oh yeah, you just go to your the book and you send it to a chart, or you type out what Donut said. Okay, yo, what's up, Mr. Harris? He said, on a beautiful trend day like today, can you talk or walk through a little bit of scaling out? So yeah, so that's great. That's tying into what we're gonna go over. And someone also asked, for how long can we use the zone? I mean, if it broke the zone, is it not useful anymore? Not really, because you can see like inverse head and shoulders, right? Or, you know, like, I mean, this zone was technically broken through, you see, but it was a fake out breakout. Also like inverse head and shoulders and stuff. I don't really see one. Oh yeah, I do. Right here, right? This little pivot, lower wick. It's broken through, but it pops up, comes back bases, and then moves further, and they use it later in the day right here. So, guys, it's contextual. It's going to take you a long time to get used to trading supply and demand, but it is one of the strongest aspects of my trading, right? So, on a day like today, how many of you were like, you looked at your, you know, your Thinkorswim app or, you know, your Webull app or whatever, and you're just looking at your positions on the day, and let's say you sold something at like a contract at $4, and you look back on the day and ended up closing at like $8 or $10, right? So twice as much, or 150% higher than what you had sold, and you're like, well, dang, you know, I could have held on for a lot longer and made a lot more money, not really doing anything. But what you did was you over manicured the trade, right? You were, you know, you practically messed up your own trade. Now, whether or not it was your goal to take it to, you know, whatever desired zone, or if you just sold because, you know, you were scared of this pullback, whatever it may be, I'm going to try to explain to you in the most, you know, basic sense how you can hold on to these trades, right? And there's a few ways. You could look at, you know, obviously EMAs, your 9 and 20. Those are my two favorite EMAs on multiple time frames. Now, depending upon what time frame you're going to take it, is completely up to you, right? And the kind of trade you're about to take. Meaning, like, if you're trading a 1 minute, it should be like, you know, you're looking for a very key trend or strong momentum trend to be held, right? So like someone like this, like, hey, 9 and 20 is holding, it's holding, it's holding, right? Someone would capture a piece of this chart right here, piece of this trend, okay? And if you stuck solely to that, then you would have gotten stopped out like right here, right? And then we can see the rest of the day, it obviously goes up much higher. Okay, but that's because you stuck on the 1 minute. You have to be able to look at your other time frames. I mainly look at the 1 minute, 5 minute, and 10. Okay, so let's say you grabbed an entry. We did here. I'll explain this trade. Let's say you grabbed an entry there. You get your entry with your 1 minute or use it to hold for the early stage of the trend. But once you see that it's so far away from your entry, to me, that's a free trade. If you've already scaled out and you're only holding a core, right, of the trade. So you can look at your 5 minute, check your 9 and 20 in your 5 minute, and look where that 1 minute EMA trader stopped out. That same arrow, right? He sold his contracts to the next wave of buyers who are looking to break it up further, right? To break out further. All right. I'm going to talk about trailing stop losses. I use mental, but many of you should most likely use hard stops, right? Hard trailing stops or whatever bracket orders. Excuse me. But this 1 minute EMA trader got stopped out. You have to be able to value your entry. I had such a good entry. I was literally like, man, that's the lowest point of the day. I'm not going to sell this thing until like, I'm done trading practically. And even on these strong pullbacks, at this point in time, my trade was still up like $60 or $70 a contract. Why would I stop out of it? Those are free contracts at that point. So same thing goes for this. Hey, you have an entry below VWAP. We're pretty far from VWAP. Even if it came back to it on a 1 DTE, you'd be able to sell about break even, right? So use all of your time frame EMAs to your advantage, right? The 1 minute EMA traders stop out, give it to the 5 minute. The 5 minute EMA, 9 and 20 EMA hold you into the trade practically all day. I mean, this little bit at the end of the day, right? It's going to be pretty volatile, but you capture. I mean, be honest with yourself. Did this chart on the 5 minute, the most simplest time frame and the most common time frame I'd say amongst retail traders, did it tell you to stop out? From 11 a.m. to almost 3 o'clock? Was the 20 broken through? No, it was not. I mean, and look at your 10. The 10-minute 20 was never touched, right? So why does a trader sell? Right? Well, you guys have any idea why a trader sells when they have such a good entry and everything aligning for them? Obviously in hindsight, but even, as we develop, I mean, if we look at this candle by candle, right? Look, oh, it's pushing up. Okay, oh, it hit the 9 again. Well, let's see. You got lower wicks right here. That's a pivot kind of demand. Let's see if they hold it. Okay, oh, they do. Oh, we're ripping higher highs, right? Move your stop loss up or scale out. Okay, we're coming back. Close to the EMA, doesn't hit. Okay, it's hitting the EMA now. Okay, hitting it again. Is it going to bounce? Oh, look. Look at the lower wick. Right? Oh, we're pushing. Oh my gosh, look, 5 minute 9 EMA again? Right? It developed for, I mean, I don't know. I feel like many times the traders lost money is because they sold their contracts too early. Then they were like, emotions got to them. They're like, oh my gosh, I just need to get back in. And they get a bad entry. They stop out on the EMA. They watch it rip up, rinse and repeat. You get washed in your emotions. Or you were trying to pinpoint the reversal all day, right? Because we've been in a bear market the last 4 months and a little, the direction of the chart freaked you out, right? Well, here's a little pro tip. Type a hyphen in front of QQQ. Now you tell me if this looks familiar. Come on, be honest, right? Have you not traded that within the last 4 months? More than 30 or 40 times? Right? So what was the difference? The color of the candles? The direction it was moving? Come on, guys. When we are trading, it does, I don't care what I'm trading. I don't care, what events are going on. I can base something, I can base risk off of something and take the same thesis, same strategy and apply it day after day after day, right? So why does the retail trader sell his contract from here to there for pennies, right? Not talking about this one now, right? You get such a good entry and you sell it right there, right on the pivot break, right? You sell it. And then you're like, oh my gosh, why did I do that? Let the chart tell you what to do. I always say, trade the chart in front of you, right? Meaning, trade the chart in front of me. That doesn't mean, hey, just take entries based off what the chart's telling me, right? Stop out or scale out as to what the chart's telling me. Also, what could have held you in longer? Well, you guys remember the directional analysis from this morning. Okay, 9 and 20 EMA. Wow, look at that. If you guys were here for about the entries yesterday, I told you I needed at least 2 levels of confirmation to take an entry. Why would someone not take an entry here? The break of the pre-market high and then the base aligned with the 5-minute 9 and 20 EMA also, right, was the first pullback on this rip up. The first pullback, right? Rip up, rip up, rip up. First true pullback. So that's 3 confirmations. All right. Now, you're going to hold on with your 9 and 20. Yeah, it's developing. This is not going to be shown if you're sitting in the trade at this point, right? Where price action is just like this, right? But you have your targets as your zones drawn out an hour before market opens. So you know where bulls are targeting to bring price to and where you can hold on to for larger targets with a smaller contract, okay? So, if you're trading 1 or 2 contracts, you're going to have a different style of trading. This is how I would say many 1 to 2 contract traders would be or should be trading, right? So right here, higher low, or that's a low, higher low, right? Pushes down, pops up, that's the next higher low. Okay, so let's say that you take an entry marked off of this lower wick in this demand zone. You snag an entry there, right? It's a tweezer bottom on the 5-minute. Pretty simple setup. Under VWAP, right? How much time is being spent above or below VWAP? You can see majority of time spent above, and buyers are really eating it up under VWAP, right? Pretty strongly. You see majority of lower wicks. So you take an entry there. Let's say you get 2 contracts, right? Use your 5-minute chart, candle by candle, to keep you into the trade. Right, so what I mean by that is, hey, you take an entry there, that's your stop loss on the trade, this red line. Okay, that's your stop loss. Next 5-minute candle, that's your new stop loss. And again, just keep moving it up. Moving it up. You would see a candle close, right? That's what would stop you out. Right? Or you can, you're like, hey, I'm pretty far extended. Now we have the EMAs in our favor. You can hold on to that, but I'll show you, right? Moving it up, still not stopped out. You got your entry down here in a demand zone, okay? Still not stopped out. Nope. 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 Right here, this is where traders get a little dicey, right? You could say, hey, this is the beginning of a pullback. You also see, right, that it closes on the 5-minute candle low, but you do have the 5-minute 9 coming up. That's really up to you. This point in time is where many traders get confused, but you can give a little wiggle room just because your entry was so good. If you can't give a little bit more to the 5-minute 9 after having such a prime entry, then you're just going to get wicked out quite often, okay? So right there, I showed you how you could have taken a trade, 1 or 2 contracts from 305 to 308.77, practically 309. Yeah, it hits 309. That's a 5-point move. right? Well over $100 per contract if you're trading the first 1 to 3. If it's a 0 day, that's like $300 a contract. You know, I mean, within 30 minutes from 10:30 right here to about 11 o'clock. 30, 40 minutes right there. Okay. So let me catch up on some of these questions. Oh, and then scaling. Okay, so Mr. Harris talks about scaling. I scaled it a lot. So I had my entry here, right, Mr. Harris, on the 306s, right? Once it broke the high a day, I scaled some. I scaled some prior as well, right? Pops up, broke it, scaled some, you know, scaling a little bit. Now, I've gotten into this kind of sense now that we know that we're not consolidating for the most point, or, you know, for, you know, the most part. I am, instead of selling that half right on the pop, I will reverse it. So normally what happens is, like, you know, hey, a pop up, I'll sell half or a quarter, right? And then I'll slowly leave breadcrumbs. Like, it'll go from like a quarter scale out, right? And then a tenth of a scale out, and then a fifth of a, or, you know, 5% scale out, stuff like that. But what I've been doing, because I'm like, man, I'm selling a big portion of my really desirable contracts, is I'm beginning to scale little pieces. So like, you'll see right here, 306 call, QQQ scalp, locking some profit, right? And then 60 a con gain, right? 100 a con gain, right? Slowly scaling out, and these ultimately go up like plus 300 a contract, right? But I'm scaling earlier on much lighter, right? Looking to hold through a possible trend. Now, I know that not every day is going to be like this, but let's just say in reference to taking a trade later in the day, like many of you may have, okay? So let's say, like, you know, you take this entry, right, on the 5-minute 9. If it broke the pivot high, I'm scaling out on this candle, right? And I'm not scaling like, you know, majority of it, but I am scaling out. I'll lock in profit. I see, hey, it breaks up at bases, previous high of day, and 5-minute 9 EMA held. That's good risk, especially with the 20 supporting us, right? Next pivot high, I'm locking some out, right? Joining the ask. Now, not instantly. I want to let this move kind of breathe a little bit, right? So like it pops up, right? Pulls back, hits the 9 EMA again, right? New pivot. This is obviously moving our stop loss up. You have a pivot high here. Obviously, you know, you could have been like, hey, pivot high break. It's going to push into the previous day high supply. Scale again, right? Leaving a core. I don't hold a full position all the way to the top. Now, I know many of you strive to do that, but I've found that it drives me crazy trying to hit those kinds of trades every single day. And no one knew that it was going to rip up this far. We just had zones that we knew, right? I have these target zones, right? I have all these target zones, but I know that there's the possibility of it either breaking and basing or rejecting, right? So these are strong targets to scale out at. When would I short this kind of move? Well, if you really look at it, there's no lower high confirmation. It was all, you know, if I clear this chart out, look at this. Higher high, higher low. Higher high, higher low maintained. Higher high, higher low, high, low, high, low. I mean, all day. There was no sense at any point where it popped up, pulled back, maintained a higher low, popped up again, lower high, and then a lower low being broken. At no point did this occur. The lower high and the lower low, right? In terms of price action. It was all higher highs and higher lows today. Let's see here. Don't have much time left. So moving forward, let me read off some notes here. Pace yourself by using the 5 and 10 minute, 9 and 20 to get stronger read of price action and pullbacks. This is to hold on to trades with 1 or 2 contracts. Also, use your supply and demand zones and whole dollar psychs to bring you to larger profit goals, right? So if you bought here 305, you know the next whole dollar psych is 310. 310 was actually where it popped up, pulled back. There was a lot of, you know, action going on here, right? Well, over 310, it's 315. Yes, hits in the after hour. Maybe some of you guys held on to some contracts for the following day, whatever, or you're just trading commons, you know, whatever. Also, move your stop loss along the way by using the 20 EMA or candle by candle using the 3 or 5 minute for large core scale outs. So like I showed you, these 5 minute candle holding, once it broke, you could have scaled a large core and then maintained a smaller piece of your position, like 25% or less, to ride throughout your EMAs, right? And many times what you'll find out, that large core, you get a big chunk of change, right? Funding the free contracts now that you initially took, your core, which is free, because you've scaled out a big portion, you've already got your money back. And on the core of the trade, if you can hold on to it by using the 5 minute and 5 minute 9 and 20 EMA, it will often make much more than your initial position scale out, right? And ride the smaller core with the 20 EMA, right? So let's say, hey, popped up, pulled back, you scaled out a larger position. Well, the 20 EMA wasn't broken till way up here, right? And that is another 3-point capture on your core. And you had targets there. I mean, it's very clear targets on the supply and demand zones that I showed you how I drew them. So we went over the fake out breakout. I want to touch on the 84% rule on the 308 calls today. I call these out right here. All you guys ask me about the 84% rule, and I'll show you right here. 10:29 a.m. If it breaks VWAP, I will 84% rule my calls, right? And then I said 1 minute later, strangling the 308 calls at 10:30. Yeah, when it bounces, I don't take the same strike. Let's say you take like 307 calls here. When it pops up and pulls back, I would not add 307 calls again. I would most likely add the 1 to 2 out of the money, right? So like the 310 calls right here, pops up, pulls back again. You could do like 311s, right? So on and so forth. But that's a bit more of an experienced thing to do. So I want to touch on something here, the 308 calls. Okay, so at 10:30, I take them right here where it broke VWAP. Like I said, I would. So you can see right here, this green candle, 10:30, breaks VWAP, right? I said I will 84% rule my calls if it breaks VWAP because I just got stopped out, right? I took the 308 calls, risking the pre-market low area, and possibly shaken out of my call. Yeah, right here. Possibly shaken out of my calls. Okay, so I want to show you on the options contract chart. Right here, this is the 308 calls, right? My initial entry was right here, okay? Was right here, around $1.80, okay? And I actually came in too early. See this lower wick? Look at what happens. The buyer steps in on the same lower wick much later, from 160 to 170. I got stopped out on this little wick, and I was like, man, I really just got wicked out. And a minute or two later, the 84% rule, this is, I didn't create this. This is from Live Traders, right? But it states that when you take an initial entry and you get stopped out, right here, I got stopped out, direction, or edit properties, up, make it red. I got stopped out right here, okay? When price comes back to your entry, you have the decision to whether or not to take it again, which would be an 84% rule, or leave it alone. I took it again because I felt like I got wicked out. I mean, I say it right here, right? 10:28 a.m., possibly shaken out of my calls. Some buyers stepping in here, same time frame. Then I say if it breaks VWAP, I will 84% roll. And I take the 308 calls, right? I take them, right? Well, I take the 308 calls. I'm going to use the same risk. I'm going to use 165 now that I see that that's the true pivot, right? And I took them around the same price. Now, with this, I showed you on the underlying on QQQ, we held through. Why? Well, one, there was a trend line. Hold on, this trend line here, right here. There was a trend line there. Two, you had your EMAs breaking or you had your price action breaking and basing above VWAP, And your 1 minute EMAs cross. You see that it's holding here, here, and here. The 20 EMA is not failed, which tells me to stay in my trade, right? Also, if you look on this trade right here, the 308 calls, we had targets, right? So let me, I mean, you can just see, right? This is a left shoulder of the possible head and shoulders, right? This is the pivot break. Another pivot high right here. This is the high of day, obviously, for trading at this point in time, right? I mean, here, let me change the strong set, right? You'd have had a pivot here. This is the high of day. I took the entry right out of the demand, not in it, but right out of it. I take the entry, right? We have targets. Well, targets are hit. First target hit, 250s, right? I scale out a little bit before, but we scale more at 250s. We hit $3 and it surges over to 350, right? Well, from this point, just on this leg, this isn't the entirety of the move. This is just trading that 5-minute candle by candle that I showed you earlier. From this point to this point, that's 80%, right? 85% just by trading that, right? And then, like I told you, don't solely stick on your 1 minute EMAs. Look at your 5-minute. On this pullback, I mean, look, had you held, I did not hold all day, right? I don't sit there and manage things all day, but I literally snagged the bottom right here again, $1.87, right? These end up going at the end of the day plus $5, so $500 a contract, 271%. I get out for like $200 or $300 a contract, which is completely fine with me. But you know, it just shows you how you can find entries, one, by using supply and demand zones, and two, if you get shaken out, you can always use the 84% rule, right? This is the 304 puts, so I'll show you right here, because I strangled them. You guys saw that, right? 304 P's scaling into them right here, and then I strangled the calls, so I was trading both positions. So when I took the puts here on the 1 minute, let me show you. 10:27 a.m. Let me get a clear chart. All right, 10:27 a.m. right here, this candle, right? So I've done this plenty of times before, and it gave me good risk, right? And I say 304 P's, risking the 1 minute EMAs. So it's pretty tight of a stop loss, right? So I took the puts, right? Pushing up, pushing up. I've traded this before, right? Knife down, first EMA pullback. Knife down, second EMA pullback. I'll risk these 1 minute EMAs, the 9 and the 20 area, right? And it did push down and it gave me a lower low. And that's when I cut my calls and I was like, wait, you know, that I really feel like, you know, a buyer just stepped in and I just got faked out. And we immediately, you know, strangled the calls, cut the puts. It was very quick. I lost like 15% on the puts, but ended up making right over 100% on those calls, right? And had I been biased, been like, man, I just got stopped out of my calls, and it's ripping out without me or about to push, I feel like, and you hesitate, then, you know, that hesitation is going to cost you, right? Not only your, you know, possibly, you know, profitable trade, but also with your emotions, right? You're going to be so stressed out that you miss out on that trade and you had everything right to begin with, that it's really going to tilt you further on throughout the day, right? So, yeah, this is Think or Swim. And there's an 84% roll video that I made for you guys to check out. Okay. But yeah, I mean, that's pretty much what I wanted to cover in tonight's session. We may have one tomorrow. I don't know. We'll see. But, you know, I'm going to go through with the giveaway for those of you who stuck around, right? Also, I'll send out invites to those who won last night. I do apologize. I just been pretty busy lately, especially with the beginning of the month. Oh my god, donuts. Okay, so giveaways. Yeah, no problem, brother. Pre-market starts, I mean, the pre-market prep that I do starts at 8:30 a.m. in the morning. Okay, keyword. Dun, dun, dun. you could put oh, we got 0 DTE. You could put 0 DTE as the keyword to enter. Okay. Do I have live stream that is just audio? Yeah, in the Discord, you don't have to watch the stream, right? Like people are watching the stream right now, but you can just join the voice channel and just listen to me talk. And then also you can watch the trading floor, which is where I call everything out, everything that I'm trading on stream. Right? Look at these 308 calls, 100 a gain, 150 contract gain, $200 gain, right? And then this one over here on the 306 calls, $100 contract gain, yada yada. Right, and then these are all my entries and stop outs. Okay, so yeah, type in 0 DTE. Also, one moment while those fill up. Right, here we go. Oh, this is the link, right? If you've enjoyed tonight's live session, you want to join the Discord where I daily live stream my trades and my ideas, as well as 3 to 4 EDU sessions a week. There is the Patreon link in the chat for you guys to check out the Discord. Now, I can give you a quick overview of the Discord, right? Trading floor, like I said, this is where I post all of my callouts that I'm taking or ideas from the stream. And the watch list channel, this is where we do pre-market prep. All right. I also post the directional analysis on here. You guys have probably seen it on Twitter, but it showcases all of the key zones that will most likely be interacted with in the day. And if you can see here, right, previous day low held, they take 306, 309, 312, and actually all the way up to 315. Every single zone was hit. Okay. Stack chat, this is where traders hang out. Skilled floor, this is where traders who have stuck alongside the process of being in the house of stacks have posted and have showcased their skills. Profits and percents, of course. Pop quiz, I do a pop quiz every day. Questions, problems, trading, chart review for many of you to study and converse with each other, right? And a ton of EDU, as well as my EDU video library, right? Which I've shown quite a few times already, but just for you guys to see again, right? These are all of the videos that I deem as necessary for you to follow along, or at least try to understand my strategy or style of trading. Okay, so basically, I am a risk management trader. I stress risk more than anything because as a day trader, that is all that we have. Okay, I'll talk about 9 and 20 EMA, supply and demand, pivot points. You know, holding on longer for winners. How to, you know, this one says fighting the trend. Part 1 and part 2. I mean, that was a long session for it, but these are all 1-hour videos. FOMC prep, TA refresher, trading larger time frames, 9 and 20 EMA strategy, how to buy high, sell higher, how to control emotions. Also, main option strategies. And a lot of options basics stuff, right? Everything that is kind of necessary, I would say. So, how do you play Fridays? Am I in and out quicker? I mean, I trade them just like any other day, right? I will take profit, and I am looking to end my day quickly and on a good note, and maybe hold some cores that I can watch on mobile. Okay, so here we go. I'm going to select 2 winners for a 1-month membership for the month of June, and you must not be a member already, okay? But here we go, and it goes to M12376, right? They just followed yesterday. So you can send me a DM on Twitch, and I'll get you fixed away tonight, as well as the ones from yesterday. I do not do a trial membership. I do stream the first week of the month for you guys to see how I have been trading. You can look at yesterday's VOD on Twitch and today's, and you've seen that we were very profitable. Today, actually, I made, let's see, 11.13% on my account, and yesterday 12.64% on the account, right? And I walk through all my trades just like this. All right, so send me a, yeah, there you go, M, send me a DM, and we'll do one more. Yes, I'm going to stream tomorrow. I trade the open every single day. The Cincinnati Kid 89. All right, there you go. So send me a DM on Twitch, guys. I will see you all tomorrow morning, 8:30 in the morning, sharp. I will be on for pre-market prep. We will chart QQQ, SPY, AMD, and NVIDIA, and I'll walk through my trades or my ideas just like I always do. Like I said, if you want to join the Discord and truly learn to become an independent trader, right, or at least strive to be one, I feel like we have a pretty tight-knit community that will, aid you along that journey, as well as this is not a place for shadow traders, right? I am truly here to build and watch traders fulfill themselves on their journey, their trading journey, and I've already, that I feel like there's about 10 traders in the group already who've already quit their job and gone full-time traders, relying solely on their day trading, right? Just by this very simplistic strategies that we teach and do every single day. Yes, it will stay on Twitch for 60 days. So, you guys, tomorrow, remember it's Friday. Typically, traders' worst day of the week, Mondays and Fridays. Defend yourself, be protective, and always look to, put risk first, right? Where are you going to stop out prior to where are we going to go, okay? So, see you guys tomorrow morning. Get some rest. I hope that tonight's live session helped. Make sure you guys are following so that you see the notification for the live trading stream tomorrow morning. Get some rest, get some sleep, drink some water, and have a good night, guys. Thanks.